NIO stock ended the week on a steady note, closing Friday's regular session at $6.38 per share, down about 2% on the day. In the aftermarket, the stock clawed back a couple of cents, finishing virtually flat heading into the weekend. On the surface, that might not sound like much. But when you step back, it's actually telling us something important. For more than a week now, NIO has managed to stay above the $6 mark. That may not sound glamorous, but it's a real sign of strength given where this company and its stock were just a month ago. For 6 months, NIO couldn't stay above $5 for more than a session or two. Every attempt at a rally was met with selling pressure. Then came last week's breakout, driven by excitement around new models, a more supportive macro tone, and a short squeeze dynamic. Since then, even in the face of volatility and market softness, NIO has defended $6 with conviction. That is a big shift, and it's worth talking about this weekend. So today, I want to look at NIO's week in review, unpack why the stock is showing this resilience, and talk about something a little different, NIO's quiet strength beyond the headlines. It's not just about daily price swings. It's about brand building, strategy, and what that says about the company's trajectory going forward. Let's start with the numbers. NIO surged early in the week, trading as high as $6.82 on Tuesday before cooling off. Wednesday brought a sharp 5% pullback, but it was framed as a healthy consolidation after a 40% run the week before. Thursday saw a modest rebound, with the stock closing back above $6.50. And then Friday's 2% dip brought it to $6.38. But the takeaway is this: in all that noise, NIO never broke below $6. That tells us there's genuine demand for the stock at this level. Buyers are stepping in consistently, whether they're retail traders playing momentum, institutional investors dipping in on dips, or shorts forced to cover as resistance flips into support. The message is clear: the stock is no longer trapped under 5. It has created a new range. Now, let's talk about Friday's aftermarket, where NIO was essentially flat. There was no major news, no earnings release, no analyst revision. But in this kind of environment, no news isn't bad news. Sometimes stability is the story. After a volatile week, the fact that NIO finished the week steady is reassuring. It tells us that selling pressure wasn't overwhelming, and that the market is comfortable holding positions into the weekend. Think of it as a pause, a chance for investors to take a breath and for the stock to consolidate before the next wave of catalysts. And there are plenty of those catalysts on the horizon. The ES8 premium SUV is already in focus. Redesigned this year, it's positioned squarely against Tesla's Model Y in the Chinese market. With its battery-as-a-service option, the ES8 comes in at a competitive price point, offering a 3-row electric SUV for families who want both space and cutting-edge tech. This is a strong product, and it keeps NIO relevant in the premium conversation. Even more exciting is the Onvo L90, NIO's mass-market brand. Analysts have projected that it could sell up to 10,000 units per month by the fourth quarter. That would be a step change for NIO, potentially boosting monthly deliveries by a third. It's not an exaggeration to say that Onvo could be the product that redefines NIO's business model. Instead of being just a niche luxury EV maker, NIO could finally gain scale. But here's where I want to take this weekend video in a different direction. Let's step outside the daily numbers and look at how NIO is building its brand. In China, factory tours have become a powerful tool for EV companies. NIO has leaned into this, opening its battery swap facilities and production sites to the public. It's more than just marketing. It's about creating a community of users who feel connected to the company. It echoes what Tesla did in its early years, where owning the car wasn't just about driving, it was about being part of a movement. NIO has also started pushing its Firefly brand, a smaller electric hatchback aimed at Europe, Asia, and Latin America. Launches are expected around 2025. That shows that NIO is thinking globally, not just in terms of Chinese deliveries. It's planting seeds for future growth in multiple markets. This is the kind of quiet strength that doesn't always move the stock price in the short term but builds long-term resilience. When investors see a company innovating, diversifying, and building loyalty, it creates a foundation for confidence. Of course, NIO doesn't operate in a vacuum. Competitors like XPeng and Xiaomi have posted strong delivery numbers recently, while NIO's volumes dipped. BYD continues to dominate the Chinese EV space with unmatched scale, and Tesla remains a formidable competitor globally. That's the challenge NIO faces, executing in a fiercely competitive market. But again, This is why brand differentiation matters. NIO's battery swap model sets it apart, giving drivers a unique value proposition. The Onvo line gives it a shot at volume scale. The Firefly hatchback expands its global ambitions. While rivals fight on price and scale, NIO is quietly carving out a niche based on innovation and community. We also can't ignore the macro backdrop. Bridgewater Associates, the world's largest hedge fund, recently slashed its holdings in NIO and other Chinese stocks, citing broad concerns about China's economy. That was a headwind for sentiment earlier in the month. But it's important to note that those moves weren't about NIO specifically, they were about macro risk. At the same time, Jerome Powell's Jackson Hole remarks hinted at a September interest rate cut in the US, which was a tailwind for growth stocks like NIO. Lower rates reduce the cost of capital and make future earnings more attractive. Macro factors can cut both ways, but right now, the dovish Fed tone is helping balance out some of the concerns about China. So where does this leave NIO heading into next week? The technical picture is straightforward. $6 is the support line to watch, and it has held for over a week. $7 is the resistance line, and if NIO can push through that level with conviction, it could set up for a move towards $7.50 or even $8. From a catalyst perspective, investors will be looking for September delivery numbers, updates on ES8 orders, and progress with Onvo production. Any confirmation that these vehicles are gaining traction could be the spark that pushes the stock higher. But the bigger picture is about consolidation. NIO has broken out of its old range, defended $6, and is building a new base. The question now is whether it can turn that base into a platform for sustained growth. To wrap it up, NIO closed Friday at $6.38, down 2%, but clawed back 2 cents in the aftermarket. More importantly, the stock has now held above $6 for more than a week, a sign of quiet strength after months of struggle. There was no big headline today, but sometimes stability is the headline. NIO's story right now is about resilience, brand building, and preparation for the next chapter. The ES8 and Onvo models give it product momentum. Factory tours and the Firefly brand show long-term thinking. And the technical chart shows a stock that has defended its breakout and is consolidating in a healthier range. So as we look ahead to the coming week, the question isn't whether NIO can survive above 6, it has already proven that. The question is whether it can use this base to push higher, test 7, and remind the market that it's not just an EV stock on life support, but a company with a credible vision and a community behind it.